Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review on the Ides of March, March 15th, late Friday morning. Not much new with the overall market. It's an interesting situation. If you were kind of dropped in from outer space, you just look at the evidence and most of it's still positive. The intermediate term trend of, all the major indexes is up. Some of them hit new highs recently. Intermediate term trend of most stocks is up, even the broad market. Leading stocks, still trending higher, that sort of thing. That said, over the past month, there's no question that, the Nasdaq, I'll show you the Nasdaq, the IBD 50 index, a lot of, of the tech AI leaders have done a lot more chopping than trending. They've really kind of just been up, down, really since early February. So it's not so much, a yellow light or a yellow flag or whatever, red flag. It's more like the green light has gotten a little dimmer, I guess I would say. So like the evidence has gotten a little bit less, bullish from, really a stampede higher there for 3 or 4 months off the lows. But at the same time, it's not like we've seen any, major breakdowns or, tons of abnormal action. Yes, there's going to be some earnings blow-ups. That happens all the time, but nothing, widespread that's obvious at this point. So to me, I kind of like where we're at. In Cabot Growth Investors Model Portfolio, we're being selective on the buy side. We did put some money to work last week. We have about a quarter in cash. Could go a little bit lower, could go a little higher, depends on the day, if you ask me. But I think something like that makes sense while we're trying to hold on to most of our winners, that have been really off to a good start, because big picture still looks like we're early-ish in hopefully a bull phase. So some of these things can go a lot higher down the road. But we're not chasing every uptick or buying every breakout or something like that. We're trying to be a little bit more selective because there's no question, the buyers and sellers are fighting it out here. And we'll just take it day to day. If this is just a consolidation here the last 5 weeks, 6 weeks, and we just start to ramp from here, as a pause that refreshes, I'll be there. At the same time, sentiment's elevated. Some of these things have had big runs. So, having a little bit of cash, being discerning makes sense to see how leadership reacts, especially the names that kind of led coming out of the gate there last November. Okay, so let's hop in the charts. I'm using Market Surge. Again, they changed the name, but similar product, improved product from Investors Business Daily. You can learn more at marketsurge.com. So, as always, we'll start with the indexes, and you're going to see, this is the Nasdaq, and you're going to see, a lot of sort of on the daily chart, up, down action. At the same time, as I record this, the index is at its 25-day moving average. So again, it's not so much like a yellow flag. It's more just like, well, the green light's a little dimmer is kind of how I'm putting it. And then back here, the index kind of hit 16,000. This was February 8th or 9th, I think it was. So, 5 weeks ago. And you can see just no net progress since then. That's not abnormal. It's just sort of I'm just stating facts, but, the intermediate terms trend up, but, with some of the NASDAQ stuff, it has been more choppy than uptrending. Okay, some of the other indexes look better. S&P 500, smoother. And I'm going to talk about one area of the market that is starting to come to life, not a growth area, but still worth monitoring. The mid caps here, MDY, you can see this is stretched higher to new, I think it's all-time highs. I think it actually did click all-time highs here recently. New York Composite. Either way, you can just see the trend is up for all of them, even things that have been chopping around, even the small caps, which remain, the worst thing out there, worst thing, meaning the lagging. It's still above the 50-day line, still hanging around multi-month highs, so you can do a lot worse than that, okay? But you are seeing some of that churning. Same thing in like the IBD 50 index. It's hard to, the daily chart has, it's only priced once a day, but take my word for it. This was kind of that February 9th high, and I'm just drawing a straight line across. So basically unchanged again for 5 weeks. Is it abnormal? No, same thing. It's kind of sitting at this green line, which is the 25-day moving average, but just getting more choppy. And you've probably, my guess is you've noticed, even if you're buying some fresher names, and there are fresher leaders we'll go over, it's not like a ton of money's being made the last few weeks. I mean, there's some stuff that goes up, but there's other things that are kind of getting hit and chopping around. So it's not like it was in November, December, January is what I'm trying to say. Okay, so we'll just have to see how it plays out. Maybe this just clear chops around a little bit and then we resume. Maybe we kind of come down here and test the 50-day line and maybe get a little fear built up, a little bit more discomfort built up, which is a good thing contrarily for the market. Maybe it's a top, and interest rates, which we'll mention here in a second, really cause a big correction. I would guess a huge correction is the least likely scenario, just because this is sort of the first maybe the first pullback if we get it in a bull move tends to be a little bit more well controlled, especially in the indexes, but we'll just play it by ear, okay? The other one too is the semiconductors. It's clearly the leading growth group, really going back to a year ago in the spring. But even coming out of this, run here, it was at 136. This is the SMH to 240. So 140 to 240, and that's a hell of a run. It has backed off here. So again, it had a little bit of a blow off. This was the NVIDIA reversal last Friday. I think it was Thursday, Friday. And so it's come down since then. But again, you're not even down to the 25-day line. And it's not like it's just, it's not like you had 4 days in a row where it's just boom, boom, boom down, 1% a day. So we'll see how it goes. I'm not willing to count it out. Now we start kind of coming up here, it's a few weeks later and it's sort of a topping area. We'll figure that out. But at this point, the chip stocks are weakening, but again, not like negatively, just sort of not as strong as they were. Okay. To be fair, on the flip side, this is the IBD Mutual Fund Index, this thick blue line. And, there really hasn't been much of a pullback. This is delayed by a day. So yesterday, maybe it's down here, but again, a little choppy, but still well above the 25-day moving average. And stuff like the IPO fund from Renaissance, which obviously tracks IPOs in the past year or two, it's still trending clearly higher and there's not as much chop. So it depends where you're looking at. It's mainly the AI, sort of the popular tech stocks. You're seeing more choppiness, chip stocks, networking, cybersecurity, stuff like that. You're seeing some of those take a break, okay? So we'll just see how it plays out. The other thing before we get to stocks here is just to mention the bugaboo here. And this is going to be a bugaboo until it isn't, sort of thing to watch. This is just interest rates. And the intermediate term trend, I would say, it depends how you want to look at it, but it's kind of been sideways here. It's sort of above. It depends how you want to call if you want to make an indicator out of it. But just eyeballing it, big trend down. And we're pulling back in here. It's not a huge pullback to the upside, but this week I would say that the 10-year and 5-year notes are up like 20 to 25 basis points just this week. So, if these things start to really kick off on the upside, my guess is there's going to be some reverberations in the market, whether it's the broad market, leadership, the whole market, whatever. So just something to watch. We'll see how this plays out. Inflation seems to be stickier, so on and so forth. Sometimes rates really affect things as they have. Sometimes they don't, but it's definitely worth noting here. And we have seen the market react to the bump in interest rates this week, okay? So, and if you really get a head of steam going and the intermediate term trend of rates really turns clearly up, I think that would be something the market would have to deal with, okay? But we'll see how it plays out. In terms of the market, interestingly, the reason I wanted to mention rates at the end there is some home builders are they've got hit. Lennar had bad earnings this week, but housing supply and some of these construction stocks, I'm pretty impressed with how they're acting. This is Eagle Materials, EXP. You can see on the weekly chart. Again, it's kind of one of these recent, more recent breakouts, just maybe a month and a half ago, 2 months ago, as opposed to November. But just really like smoke up a chimney. Nice, beautiful volume cluster here before and after earnings. This is back a couple months ago. So it ran higher. And now it's pulled back. Don't get me wrong, it could continue to pull back. It might even be a little bit better if it pulled back a little bit more in terms of if you're looking to enter. But so far, very little down here despite the big uptick in interest rates this week. So that looks pretty good. AZEK is another one. This is kind of like Trex, AZEK. And, you had your big earnings gap here. And it's continued higher, round number resistance near 50. And again, just a very, very modest pullback. Could easily kind of pull in further, especially if the market remains wobbly or continues to chop around, I should say. But so far hasn't even touched the 25-day line, which is pretty good, okay? A lot of the fresher names are they're not running higher, but they're not doing anything wrong. This is Fresh Pet. I've mentioned this 100 times. It's a thinner name. Sometimes I check, check my quotes, and I'm like, ooh, Fresh Pet looks good, and I click on it. And it's, it's whatever. It's 20 minutes into the trading day and the thing's traded like 15,000 shares. So it can trade pretty thinly, even though overall it has enough liquidity. But just notice it had it had a big tight area here, big earnings gap, and just very tight and controlled in here. Not a lot of volume, not like there's been any big selling or buying, just kind of chilling out after the post earnings action, which is pretty good. OKTA, I mentioned cybersecurity. If you look at, not to go on a tangent, but this is like Palo Alto Networks, huge earnings gap down and still kind of in the toilet. Zscaler, which was kind of Kind of a secondary leader, not secondary, it's a real company, but got hit on the Palo Alto news, came all the way back, and then got hit on its own earnings, came all the way down. CrowdStrike looks a lot better, but still at the 25-day line. But you can kind of see the chop. Here was the Palo Alto earnings. I think this was the Zscaler earnings, and it had its own earnings that revert. So it's up, down, but overall still in decent shape here. What's interesting, OKTA has been a laggard, OKTA. It was a laggard, should say. And you're going to see it's had this long, sort of endless process. But it tightened up a little bit here in the last few weeks before the breakout, which was a character change. Big earnings gap, a little sloppy, but just hanging in there pretty tight, kind of like Freshpet. Very low volume. So that looks pretty good, okay? DraftKings, I wanted to mention this just because this thing has kind of a history of, I don't want to say 2 steps forward, 1 step back, but it's a little bit like that on the weekly chart where it had this big off the bottom run after the bear market. But then it kind of like built a base, ran up, looked good, and then corrected below the 50-day line or the 10-week line, then ran up, and now it's kind of straight sideways here for the last 4 weeks. So, who knows? Again, if the market, kind of like the market, is this a, topping area and something happens and the stock dies? It's possible. But, the trend is still up, business is good, so on and so forth. Just a name to keep an eye on. If it can show some power in the market, or at least some sections of the market can really show some, buying power, not just up, down, it could be offering an add-on buying opportunity if it shows some strength, in my opinion. Bull market stocks look pretty good, which is probably a pretty good sign. KKR looks great. 100 round number resistance. Maybe it means it has to back off here, but so far so good. Apollo Group, another one of these big private equity. They're more heavy in credit. But you can just see, it accelerated higher here beautifully before and after earnings. And then just a nice tight controlled pullback here. Okay, obviously if the market really pulls in a few percent, you're probably going to see some of these, bull market stocks get hit. But so far, so good. They're not the fastest moving names, but they tend to do pretty good over time. In Interactive Brokers, same sort of pattern. Okay, this is more of a pure brokerage name. You can kind of see on the weekly chart, yeah. Again, not the most dynamic name, but nice base here, up 1 million weeks in a row on the weekly chart. Okay, and now this pullback here while things are exhaling, very calm, controlled, not even to the 25-day line yet. How you want to play these, or if you want to play these, maybe you look for further weakness, maybe you wait for a resumption, maybe you don't do anything with them, but just pointing out some pretty strong names that could be at or approaching decent entry points. Next tracker, NXT. Solar still remains, again, not to go on a tangent, but just First Solar looks bad. Enphase, Shoals, these are all, the group is terrible. So that actually is kind of what's keeping me away from the stock. But if you didn't know anything else about the group or whatever, the stock itself looks great. Big earnings gap here, recent new issue. They're free and clear from overhead, like Flex used to own them, and they spun off all their shares. And it's really just gone, very, very tight in here, sideways here the last month, basically with the market on low volume. So it is a name if you do, if Solars came to life, my just total guess, this would be the leader, obviously, and maybe it can come out or, consolidate a little bit more. But next tracker looks pretty good. In terms of some of the, I don't want to say old leaders, but names that got going. So Uber is still, it's had a big run here. It doubled from its lows to the recent move. So, I'm not going to say probably, but if it needed a rest and a correction of some sort, it would not be surprising. That said, so far, yes, there's been some resistance up here. Yes, it's chopped around, but there's no real selling so far. It's just chilling out near the 25-day line. It looks great. So I don't, maybe it's here, maybe it's lower again, like some of these other names, but so far holding in there pretty tightly, which is a good sign. I wanted to mention Palantir, just because this thing moves around a lot. It's lower priced. It moves around. This week it's down 8%. Okay. But it had this, again, 5, 6, 7 months of no progress, huge volume for 2 or 3 days after earnings. Tried to get going here, but this is, again, the market's not quite ready. So we're seeing some of these stocks kind of like try to, quote, break out, and then they kind of come right back in. And so you'd like to see it. I'm not saying, you'd like not to see it go down 3% a day, obviously, but it's just kind of back in this range. Looks pretty good. Again, no real selling volume. See maybe if it can find some support. It is a name that's still on my watch list, okay? Dave & Buster's, Play. This has earnings. Well, not for another couple weeks. But it looks like it's finally left this range behind, decisively out, and now again you just have this tight range. Nobody's talking about it. It's not like, it's a small, it's $2.5 billion market cap, but nice kind of consolidation here. AXON, this is a bigger market cap, over 20 billion. But again, this is sort of like Interactive Brokers. It had this nice gap. Weekly chart looks good, all-time highs here. You can see boom, boom, boom. And now so far, so good on the pullback. Very orderly, could go further, maybe 300, whatever. But, very orderly in here. You're not seeing any, down, 14 points or something like that. It's just kind of nice and controlled in there. And then the last thing I mentioned earlier, there's kind of a new group emerging. Well, it's commodity stocks, which is interesting. Inflation is still high, so on and so forth. So I'm not going to judge it or get into macro. I'll let everyone else do that. But, I'm just going to run through, like, this is XOP. Excuse me. This is oil producers, explorers. I'm not saying the ETF itself is, buyable or whatever. It's kind of back into some resistance. But you can see it's actually been kind of cranking ahead all year since the turn of the year. And it's popping a little bit now. Oil prices are kind of firm in the $80 range. Oil service stocks, OIH, not as strong overall, but again, the same sort of pattern. And there are some names, even oil or outside of oil. This is Diamondback. This was kind of a big acquisition they did, which kind of made them maybe themselves an acquisition target. But either way, the stock came alive, rested, and it's kind of followed through on the upside here. You have Southern Copper, SCCO, which is obviously copper prices. I don't have a chart here, but beautiful breakout here. And even like a Steel Dynamics, STLD, kind of right back up. It's built this huge, it topped last March. So it's been a year of these things kind of correcting and consolidating. The numbers are bad, but sort of that's what commodities do, is they tend to get going ahead of the news. And now the stock is, testing new highs. I'm not saying there's some major blast off in Steel Dynamics, but they're acting well. So it is kind of interesting, like maybe you are getting some rotation under the surface in some of these, oil, commodities, copper, whatever type names, just something to keep an eye on, okay? But as for the overall market, like I said earlier, all I can say is, we're positive. I'm bullish. Big picture, I'm very bullish. I think we can go a lot higher. Near term, I think we are seeing, it's a little bit of a character change. We are seeing the buyers and sellers fight it out. We're seeing a lot more just up, down, choppy action, news driven, this economic report, this earnings report from this company, this group is down. 2 days later, that group's back up, that sort of action. So it's not negative. It's not a red flag. We're still in an uptrend. But I think there's no question that, if you're in there buying every day or two, the last probably month, it's been a lot trickier than the prior 3 months. The prior 3 months, obviously, mostly straight up. So I think let's just see how it goes. Maybe this just kind of chills out for a little while and we resume higher. I'm all for it, and I'll be ready to pounce on more and more fresh leaders. My guess is some of these tight charts I showed you will, break out on the upside if that's the case. But, if this kind of goes on for a while, or we do have a modest pullback, or there's some rotation, just kind of keep on your toes from there. So bullish, but not flooring the accelerator right this second. Okay, took a lot of time today. That's all the time I do have for today. Thanks for watching this week's Cabot Weekly Review, and come by again next week for another video.